Hey folks, Dan Frio here with your live market update and what the Federal Reserve is going to do. So I want to show you guys in 1 second. Well, now the Federal Reserve should be coming out and telling us what exactly they're going to do at this meeting. So let's get over to the headlines right now. We're going to see, I want you to see just market reactions to a lot of this. And I'm not really taking questions today or anything like that. I will at some other point, but what I want to talk about in today's video is just, the initial market reaction now that the Federal Reserve's come out and gives their decision. So let's see what that decision is. You're going to see market reaction. This is the cool part of it. As soon as they come out and do announce it, let me see if I can get any updated headlines. But here we go. We started at 10. Here's where the market is. This is the MBS market. So what we're watching right now live is how the mortgage bond market is reacting to the Federal Reserve, what they come in and tell us. But there's a lot more action behind the scenes that you'll see once they announce this. So they're going to come out and say, we're going to cut 25 basis points. And that's no surprise. It would be a surprise if they don't do it. But what they're going to do is then they're going to come out in about a half hour and they're going to start answering questions, and people are going to start pounding them on, what do you think of tariffs? What do you think of this? What do you think of the employment numbers? What do you think inflation? Oh, here we go. Did you look at that? Look at that move down 12, like boom, there it is. So this is how, so that when mortgage rate or mortgage bond prices go down, rates go up. This is how big of a move we had today. So we basically went up we were up about 10. We're now down 12. So if you guys would hold on a second, I actually have to yell out there and tell everybody to lock in their loans ASAP. And this is live, folks. So I'm actually doing this live. So I need you to hold on. I'll be back in 1 second. Hey, lock them. So if you're with us, there's going to be whoa, hold on. The markets are reacting again. I hate to do this, folks, but I want to show you guys how we react immediately to what's going on behind the scenes. So you saw that we were down 12, we were up 10, down 12. Now we're up 13, now down 5. It's completely volatile. So this is going to happen for a little bit while the bond market kind of adjusts to everything. Let's just go into see if there's any headline news coming out right now. Here's what changed in the new Fed announcement. Let's see if we can go through there. So here's what we're seeing. This is actually what the Federal Reserve does is they come out after each meeting and they basically read this itinerary. And there's usually just minor changes that take effect. But here's what the changes are right now. I'll try to, once this video posts, I will put a link down below so you guys can see this. But let's see what it's saying down through here. All the rest of this is kind of the committee seeks to achieve unemployment rate, blah, 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 blah. In support of that, they're cutting 4.25. Okay, we got that. Extended time. In considering the extent and timing of the additional adjustments to the rate. Okay, nothing. So nothing there that's really kind of shocking all. The markets are basically seeing what they're saying. But look at this over here. Let me see if I can move it. I'm going to shrink this down just a little bit. Let me see if I can shrink it down. So that's what's going on in the bond market right now. Let's go over to the equity markets and see how they're faring. Ooh, they're giving quite a bit back. So if the Dow Jones was up about 120 points prior to this, it's now 58. S&P gave all of its gains back. NASDAQ gave all of its gains back. The VIX is actually going down. What the VIX tells you is basically how skittish the markets are right now. And this is kind of unique because it's saying, actually the nerve or the anxiety on Wall Street is actually coming down at this time. So that's what we're seeing right through there. Let's see the CME FedWatch tool. Let's see if they updated the dot plot. So if you guys watch my videos on a daily basis, I usually go over the dot plot. We want to see what the new one is. It's not out yet. This is the main thing we want to be focused in on. So what we're going to see when the Federal Reserve comes out and actually makes their announcements, people are going to ask them about the dot plot. So they might reveal this at that meeting. That will be intriguing because what the dot plot's going to tell us, well, let me just explain to you guys while you're on here. So the dot plot, what happens is every time the Federal Reserve meets, well, I take that back, quarterly. So 4 times a year when the Fed meets, all the members put a dot on where they expect the federal funds rate to be. So what you're seeing on your screen right now is actually that. So in 2024, here's what they thought. They thought the federal funds rate, you can't see that. Let me scroll it down a little bit more so you guys can see the numbers. Sorry, here, let me shrink this down a little bit and get my head out of the way. Let's remove this. Okay, so what you're seeing right through here is the dot plot for 2024. All right, and then they hit it right on the button. Here's where they expected things to be at 4.25 to 4.5. If you go over at the economy at a glance here, let me see if I can find that. I got it thumbnailed, so we'll go over here and look at this right through here. And I want to see what the federal funds rate. So the Federal Reserve controls what's called the federal funds rate. 4.5 to 4.75 is where it was before the meeting. So now they expected it to go to 4.25 to 4.5. So 4.25 to 4.5 is right there where they told us they would be on the dot plot. So this one panned out perfectly. So now what we want to find out is, what are they going to advise us in 2025? Because they nailed this one. What my expectations are is this is going to be completely changed. Okay, they're saying we're right now at about 4.25 to 4.5. We're going to go all the way down to 3.25 and 3.5. So another 100 basis points coming out. So if you look at the probabilities of all this happening, if you go to the CME FedWatch tool, and that's where we're at right now, folks. So if you want to check this out, you can just Google the CME FedWatch tool, and this is what will come out. So let's see right through here. So 98% chance they'll cut. And then there's really uncertainty all the way up until next May of any potential rate cuts coming in the future. But what we've been explaining over our videos for the last couple days or couple weeks is this doesn't really, what the Federal Reserve does, it plays a role in all this. But it's not the end all be all when it comes to mortgage rates. Okay, mortgage rates are going to be determined on the bond market, and that's what you're seeing right through here. So it's deteriorating quite a bit fast right through here. So this is where we are now. If you're with us, we just locked you because I just ran out there. We had a whole bunch of people on the sidelines just sitting there waiting for this. So I advise my team, put all the rate locks up on your screen. As soon as I see this and see what's happening, I'll advise them to lock or not. So if you're with us, you're most likely locked at this time. I got a couple new loans in this morning, and I hope we got those locked in for you as well, because this means mortgage rates are going to go up. Again, we were up 10, now we're down 20, so that's about a 30 move. Now we're down 21. So when you go over to the bond or the rates, you refresh this. I don't know if it's going to be updated yet, but this is going to move. We'll probably hit, we might see the 7% range once again today after this meeting. So we will be dissecting the news that's coming out, but you're continuing to see a deterioration in the bond market right now. But I will post another report later this afternoon after the Federal Reserve does speak, and let you guys know how that's going. So let's go back to the equity market. The equity markets are giving it all back as well. Let's see what cryptocurrency is. Probably getting killed. Yep, cryptocurrency is down 3,000 points right now. Let's check on an oil. You guys know how I feel about oil, and the main reason for that is inflationary numbers. So oil right now just took a little bit of an uptick up. So it's at $70 a barrel, still in line. That's not going to be a huge thing when it comes to inflationary numbers. So again, bond markets are selling off on the news of the Federal Reserve. I will be posting a video later this evening after the Federal Reserve comes out and tells us, gives us the projections. And I want you guys to understand, and I want to find the dot plot, hopefully this evening, so I can show you what the dot plot is telling us for 2025. So that's our report for today. If you want to learn more about me and what I do, my name is Dan Frio. I'm actually a loan officer. I do that for a living. I close loans for a living. I don't do YouTube for a living. A lot of people do YouTube for a living. I don't. I just do this to help you guys understand the market. Hopefully you'll find credibility in it. And then when you're out there looking to buy that home, maybe looking to refinance, or looking maybe to buy that first investment property, I hope you reach out to us. I'd love to help. I'm licensed in all 50 states as well as Puerto Rico. Again, I work at ServBank. We are the 10th largest mortgage company or mortgage servicer in the whole country. And we're also one of the country's largest mortgage brokers. So if there's a program out there, I can get it for you and I can help you out. So thanks for watching, guys. I'll be back later this evening to let you know how all this mess ends for the day. Thanks for watching. See you then. Bye-bye.